welcome to another session of 55 minutes of current and relevant business conversations right here on Business Morning. I'm John Mekwa. Let's do business. Today we're not starting from where we start from normally. We're starting from Nigeria. Looking at the markets, the close yesterday looks interesting, 0.26% in the positive at 149,842.82. Talking about the all share and the market cap at 95.525 trillion. Naira activity chart yesterday looked good also. We saw deals at 25,205, volume 5.92 billion, and value at 216.1 billion naira. Top gainers yesterday were First Whole Core, Lasako, Veriscap. They topped the gainers at the close of trade. On the flip side, we had Living Trusts, Intern Engines, and Michelos. They were the top losers yesterday. Top trades, ETI, First Whole Core, and Sterling. They were the top trades yesterday. Away from the markets, the Nigeria Customs Service says that it has commenced enforcement of penalties against this, how that reform goes. Thank you so much for being a part of the program this morning.
Thank you for having me, Amy.
Moving on now, Nigeria has rolled out a national intellectual property policy, and it's supposed to strengthen the protection, management, and commercialization of intellectual property across the country. The policy provides a coordinated framework for patents, trademarks, copyrights, industrial designs, and geographical indications, with a focus on boosting innovation, attracting investment, and supporting the growth of the creative, technology, and manufacturing sector. Officials say that the framework is designed to align Nigeria's IP ecosystem with global best practices while addressing local challenges such as weak enforcement, low awareness, and limited commercial use of IP assets.
It's an interministerial one, very collaborative experience right from 2022 with two predecessors from FMITI, Justice, Creative, Tech, Science and Innovation, a lot of private sector, the users of creatives, those who produce creativity. And what it in essence is doing is to make sure that we have a cohesive legal framework. You know, our IP has been at different fractions across the federal government, and to make sure that we can monetize the value of our creativity across various sectors. And so the owners of the mandates have worked together to deliver or to develop this policy and this strategy and this framework that speaks to monetizing the value of our creativity.
Well, as the year draws to a close, bodies assessing how 2025 went with the target of having a better 2026. The Institute of Chartered Directors, they are one of those. They had a meeting yesterday, a big meeting yesterday, and talked about how directors had to cope with the year 2025 and the lessons for 2026.
Which are the focus of advocacy for the creation of a robust ecosystem for ethical leadership and sound corporate governance as guiding principles for navigating the complex and changing dynamics in the world of business.
The environment in which directors operate today is complex. Markets are unpredictable, technology is reshaping business models, and stakeholders demand transparency, accountability, measurable impact, and sustainability. In this reality, directors must be informed, courageous, accountable, and principled. The margin for error has narrowed, and the responsibility has grown. This is why institutions like the Chartered Institute of Directors are indispensable. Strong boards build strong institutions. Strong institutions support economic development and advancement, resilience, and sustainable growth.
With directors occupying a leadership position, their success will lead to a progressive economy.
Leadership in a challenging time is a victory of character over comfort. and it rests on three essential pillars. The first pillar is clarity over chaos. The second is courage over comfort. And the third is connection over isolation. These are the things we as people need when we are passing through tough times in our business, in our country. And as a nation too, we have our own share of the storm. But I'm confident. I've seen Nigeria now for over 70 years.
And on the mind of every member is how to make 2026 even better than 2025 on a national scale.
I will say my description will simply be akin to farming. When you plant seeds, those seeds must die first before they start growing again. So Nigeria is in that phase.
The economy is moving in the right direction. There are still quite a lot of things that need to be done. I think even though these indices look positive, a lot needs to be done to make sure that the impact is felt by the man on the streets.
And just like that, the directors set the focus of contributing to expanding the gains of economic reforms in 2026.
Well, just before we get into 2026, we have to do the festivities, the eating and drinking and jollying and all of that. And that's why we're looking at the poultry sector this morning. Yesterday, we talked about food and celebrating the reduction in the price of most food items. But we did note that our guest yesterday said it's not trickling down to the poultry sector, where we have a player in that sector this morning. Mr. Femi Adelayo is the Chief Executive Officer of Faco West Africa Limited. Mr. Adelayo, good morning. Compliments of the season.
Same to you, Eni. Good to have you.
Where are our chickens? Rice and chicken very plenty. I hope that's what we're going to have this Christmas and New Year.
I hope so too. I quite think it will be like that this year. This year looks to be better than last year. The inflation rate is down 14.45%. The price of foodstuffs are lower. I mean, this is the first year in a lot of years that the price of rice hasn't hit the roof, you know. So those are good indicators. But for the poultry sector where we are in, the prices are still a bit here and there. Yeah, it's sticky. And the reasons are many. The main cause of the high prices was initially maize and soya, which were the raw materials. But there are still other costs attendant in this. You know, there's the cost of the day-old chicks. There is the cost of transportation, there's the cost of energy, there's the cost of additives, there's the cost of even things like wood shavings that, you know, you make sure that the beddings to keep the birds, you know, are fresh and healthy. So there are quite a number of things. And of course, there's the big M, the middlemen in those processes. Exactly, as well.
Because I mean, what I hear is actually the middlemen who are blocking the benefits from trickling down.
Well, sometimes some people call it law of demand and supply. You know, it's always a challenge in our industry because the farmers don't get as much benefits from what they've planted, what they've grown, what they've the birds that they have. But then people come off, buy it, and then they take it to the market, and then they sell it at the very, very high prices. But regardless, I think this year the prices should be a bit lower than last year. My estimation is that it's going to be a better Christmas than last year. That's my belief. But unless and until some things change, you know, we should have it better than last year.
Yeah, I mean, isn't it too late for things to change? Christmas is next week, so let's just deal with it. It's what we have now that we'll have next week. Is there anything that could change between now and next week?
Oh, well, when I mean change, it would be in the sense that there will be more chickens in the market,
cheaper prices,
slightly cheaper prices,
slightly.
Or even if it's not more, even if it's probably the same price as last year. Typically, what you have is every year the prices go up, right? So you might get the same price as last year or a bit lower. That is my expectation, you know. Chickens are sold, depending on where you go, between 15 and 25,000 naira in the market as at now. But then that depends on the weight and the size of the chicken. So for us, we also, as as equipment suppliers, as poultry producers, we make sure that the farmer gets it at the market, at the farm gate price, which is one thing our farmers have resorted to doing now, trying to get these things at farm gate price to the end consumer so that they get it cheaper. So we feel the effect of the policies, we feel the effect of the lower prices, and we have a good Christmas.
So you believe it's the policies that are driving down prices?
Yes, I think policies are part of it. Policies are part of it. The reality is, if you were buying maize at 600, 700, 800, and then you're buying it now about maybe 400, 500, definitely you would see a reduction in those things. Most businesses don't implement those reductions as quickly as you would expect.
Except
because
it was an increase.
If it's an increase, it goes really quickly because the effect is sudden. But then when there are reductions, there are other things that take it. There's still the import duties that people have to pay. With customs, for example, there is a 4% FOB that meant that some of the cost of importation went slightly up. So by the time you take those plus or minus into those equations, and there's still some importation in terms of additives and raw materials and things that you use to make the poultry feed. So some of those things, the plus and the minuses, energy is still a cost. So you would find that there might be a mild reduction, but unless and until you have the multiplicity of all these things coming down significantly, then we can find the prices lower, and then we can probably prevent smuggling or unhealthy chicken probably coming into Nigeria, because Nigerian chicken, grown chicken, is healthy. I mean, I can tell you that for free. It is safe, it is healthy, it is the best that we can eat for and to develop our economy and grow our protein needs.
But is it more expensive now? Why do people prefer the imported?
Well, perhaps there's sometimes there is the belief that it is cheaper.
Is it cheaper?
It is the belief.
Okay, look, but you are in there, so you should.
I don't buy it.
Oh, but you just don't want to tell us.
I don't buy it. I only eat Nigerian chicken. I don't buy it because I'm in the poultry sector. Over 40 years, I'm creating value in equipment for poultry, for livestock, and we have our own farm. We raise birds, so we don't need to buy it. But we know from research that some of these things have preservatives that force them to keep them for a long period of time over the shipping line, and they're carcinogenic, which means that down the line you have the possibility of the populace coming down with diseases that we need a better healthcare sector to be able to take care of.
Which is more expensive.
Which is more expensive. So, I mean, why don't we just do the right thing?
But maybe it's availability also. Have you looked at the supply? Because it does seem, if you walk into a frozen food shop, normally, what they offer to you first is the imported ones. Those ones that have been preserved and blocked for months.
So, I think it's a bit of the demand from the customer. If for example you went to the market and said, I want to buy Nigerian chicken, right? And then they said, we don't have. And you went to the next store, I want to buy Nigerian chicken. And you went, I want to buy Nigerian chicken. By the time they get there, they'll be like, people are asking for Nigerian chicken. Then they start to stock Nigerian chicken. And there are quite a lot of stores that have it. In fact, some are even funny enough that the Nigerian chicken, because of perceptions, they might tell you, it's imported, right? Because of a belief in the perception, But ultimately, there is availability. There are challenges in the early sectors of the day-old chick sectors. I'll give you a very good example. When there is a glut in eggs, or where there is hatchery producers are not selling, it means that they may have to call their grandparent stocks or their parent stocks. That means that the number of birds that those ones can lay is reduced. That makes the price of the day-old chicks higher. Now, that makes the price to the farmer higher, and then it makes the end result of the poultry meat higher. So across that value chain, there is some level of need for intervention, assistance, and consistency to be able to have, the lines, whether it's the grandparent stocks, the hatcheries, down to the farmers, down to the processors, and then down to you and I.
Yeah, because I have to tell you, I have had to call at least 1 or 2 people to say, oh, I want fresh turkey. And they told me they're out of stock.
Oh, if you want fresh turkey, I can get it.
Well, everybody cannot reach you, so we ask people around us.
Yeah.
So I'm just trying to say that, as you said, perhaps there's that need for intervention so that we can boost production of the local ones. And then that's, if it's there and available and the price is right, I'm sure a lot of Nigerians would prefer.
The debate or the thing with the turkey is mentally for us, because of Nigerians we have an interesting way of looking at things. Until recently, chicken was for Christmas and Easter.
Yes, that's how we grew up.
That's how we grew up.
Yeah.
But the younger generation, eat more chicken and it continues to increase, because even our per capita consumption of poultry is way lower than our West African counterparts, right? So we are a seasonal mindset people when it comes to poultry products, and that's really what happens with turkeys. Now, there are farms in Nigeria, an increasing number of farms that actually raise turkeys. Not just for the Christmas season, right? But even on a normal. But they need to grow. It's also a case of the demand. And if you look at it really, even the imported turkey you get, you always only find the wings. Whatever happens to the laps and other parts of the turkey, that's a food for thought. But it means that there's an industry that is in that space. And there's some parts in this country as well, that they don't particularly like frozen food, right? Maybe up north, there's more of a need for fresh type of produce than right down south here. So the country, as big, as beautiful as it is, has different demographics and eccentricities about how they approach poultry products and things like that. But there is availability. Most of the time is, how do you get them to market? How do those at the market know that these things are available and healthy?
And healthy. So what do you see? So we're talking about the festivities now. After the festivities, you did mention the worrying fact that it does seem like we are more seasonal minded when it comes to the demand, for this poultry product. So maybe after the season, after the festivities, markets close.
Well, it's changing. Very slowly, it's changing. We need to get to a point where there is more education and information as to how much poultry meat or eggs can serve as a protein source. We have a protein deficiency emergency in Nigeria. Look, if you look at it, by the time a child is 5, if that child doesn't get the right type of protein, the child's life is probably going to be retarded, So we need to get our young people, our children, having eggs and meat. So there has to be a conversation from people like you and I, and many people that to tell about the importance of poultry. Now, if there are more people needing poultry, there will be more farmers growing those things, right? And then it becomes beyond seasonal, and then we can do more. And at FACO West Africa, we are always, engaging, helping, teaching, equipping farms to make sure that we can mechanize, we can automate we need to feed our country.
All right, thank you so much for that. And I wanted to ask, just before you go, what do people look out for to know that it's a Nigerian? And this season, everybody's going to be looking for chicken and turkey. How do you know it's a Nigerian one?
So typically, I'll give you a few pointers. I'm not as good as that as my wife would be, but the few pointers would be that it's not as frozen. The ones that they import many of the times, because they put chemicals into it, it's oftentimes rock hard solid, right? Even the ones that we produce here, right? When you blast freeze them, when you freeze them, there is still a type of color. You will still see the color, somewhat of the color in that chicken. I mean, that's, for me, that's a basic one. Other parts of it is that you have companies that produce it, and there is the Nigerian stamp on it, it's in a bag and it has a Nigerian flag on it. We should be proud of our flag. So you put it there, proudly made in Nigeria, organically grown chicken, and then everybody can eat. And we can make
proudly made. All right, Mr. Femi Adelayo, Chief Executive Officer of FACO West Africa Limited, thank you so much for your time.
Thank you for having me, Ini. Have a Merry Christmas in advance.
I wish you the same. All right, let's take a break now. When we come back, the sugar-sweetened beverages tax and amendment to it. That will be our conversation. We're going to take a lot of sugar this time around, so these are relevant conversations, but join us after the break for that. Welcome back. You're still watching Business Morning right here on Channels Television. Now let's discuss the CETA amendment on sugar-sweetened beverages. Here we're looking at that amendment to the Customs and Excise Tariff Consolidated Act that targets sugar-sweetened beverages. And we have joining us for this conversation Professor Omojefe, joining us virtually from Port Harcourt in Rivers State. Professor Omojefe is the president of Chartered Institute of Financial and Investment Nigeria. Prof, good morning and welcome to the program.
Good morning, ma'am.
All right, so please give us a little bit of background. We know there's been talks about the sugar-sweetened beverages and taxes and the law. Give us a little bit of background on this.
Well, the sugar-sweetening beverage issue has been for some time now, and there have been some form of advocacy by some groups wanting an increase from 10 naira per liter to 130 per liter. And of course, that is a huge increase, which of course will affect the manufacturers as well as consumers. So that, of course, is an excise tax which is too high for the consumers to bear. And obviously, it can have a ripple effect on the economy.
What you're asking for, Prof, can you hear me?
Yes, I can hear you.
Okay, so what you're asking for now is more of a harmonized tax policy?
Yes, of course. That's exactly what we're advocating for. Of course, you know, the federal government have taken a right decision by trying to coordinate and harmonize the tax regime of the country, which have been going on, and I'm sure it's concluded, and we believe by next year it becomes effective. And so with this coordination, which have been applauded by many analysts, although of course, naturally, you'll see some who of course will advocate against such things. But we know that the new harmonized or coordinated tax is really going to go a long way to help the economy. It will help the government as well as help the taxpayers.
So what system do you think will be most favorable to the sector since there's this proposed amendment that's supposed to move it from the specific 10 naira?
Obviously, it will lead to quite a number of things. It will lead to market distortion. For example, you're going to have higher and uneven, taxes that will push the firms to be able to charge higher in some other cases. And therefore, the consequences are enormous. Since we already have a harmonized tax regime, I think we advocate that we should leave this tax regime at least to work first before we begin to think of trying to introduce these SSB tax again, which of course I suppose will have been an additional burden to people since it's an increase from the manufacturer's end. Secondly, of course, it could lead to increased costs. For instance, the manufacturers, of course, will now be buying things at a very high rate because they themselves, having been taxed, when they want to purchase, the cost, of course, will now be transmitted into that production, and which eventually will push down to the general public. And thirdly, of course, it will reduce investments. Okay, so those who want to come in to invest, because of the excessive tax regime as a result of these CITE acts, will make investors, of course, to shrink back and not willing to come in to invest because the tax regime is too high. And they may look for other safe investment havens where they can, of course, go to invest. And therefore, we shouldn't discourage investors with these high taxes.
Prof, can you hear me?
Yes, I can hear you now.
Okay, so but this same public seem to be at the core of it, because there's also the perspective that this is also a sort of health intervention to protect the public, against a lot of sugary consumption.
Yes, we in CFIAN, we are not opposed to public health. We know public health is very, very crucial and important. But if you can also look at critically, by global standards, Nigerian consumption of sugar is low. It is not as high as, other clients, other communities, other economies, where sugar consumption is, is on the increase or on the high levels. And therefore, since we are having low consumption by global standards, World Health Organization, for instance, have judged us at least to be one of the least people that are consuming sugar. So if that be the case, we don't need to at least emphasize this tax too much. So that's why I feel we should relax a little bit and allow this harmonized tax regime to take its effect before we think of how to, go about this. And at the same time, even if we want to go through the SSB tax, I feel that we should also try and calibrate it gradually, and see how it works, and not just bring in that increase, because the increase, if you look at it, is over 1,000% increase from 10 naira per liter to 130 naira per liter, that they are proposing.
So are you in talks with the presidential committee? I mean, since that seems to be, the coordinator, the arm that coordinates taxes in the country now, are you in talks with the leadership of the Presidential Committee on Fiscal Reforms, and perhaps they can also give a better way of handling this?
Yes, that is what we are planning to do right now, because the bill just came up, abruptly. We didn't expect that it would go through this speedily. So we do hope, at least, to dialogue with the people at the National Assembly to also give a voice, lend a voice towards this excise tax they are trying to also introduce, to tell them the implications of, adding this tax when the federal government have decided to harmonize all taxes. I remember just recently in an ICANN forum, Obiakbo chapter, in ICANN Obiakbo chapter, we had a forum, and it was on this tax that was this harmonized tax that was debated. But at the end of it, I asked the guest speaker a question when question and answer was, and I asked that what is the place of this SSB tax with this harmonized thing? And of course, simply what he answered, he said he doesn't know what is the benefit of those who are pushing for this tax, this SSB tax, what they are trying to achieve. But nevertheless, let's watch out. But I was surprised to see that this thing has already gone even into the Senate. But we still hope that we will dialogue more with them and at least to tell them the benefits and the disadvantages of going through this route. Thank you.
All right, thank you so much, Professor Godfrey Omojefe, President, Chartered Institute of Financial and Investment Analysts, Nigeria, for your time. I will certainly wish you the best in your push, to get a more harmonized tax system for your sector.
Thank you so very much. I'm grateful. You're welcome.
And now, women remain at the core of the federal government's drive towards the attainment of non-oil exports. This is according to the Executive Director of the Nigeria Export Promotion Council, Mrs. Noye Ayeni, who was speaking at a forum with women exporters in the digital economy. Ms. Ayeni explains that the initiative, which was earlier launched in August this year, seeks to build the capacity of women exporters, drive market intelligence, provide incentives, and export facilitation.
I'd like us to take full advantage of this white fund. Many people think it's just anything, but it's an opportunity of a lifetime, an opportunity that we shouldn't take for granted. The White Fund was conceived to respond to clear and persistent challenges that women face. Women face in the global trade. And when you talk about finance, a lot of women may not find it so easy to get cheap source of funding. And that's the major issue. And that's one of the things that White Fund is addressing, because it's not just about training. They're going to give grants. But I don't want people to focus only on the grant. What is more important is the skill that you acquire. I started by saying there's training on financial literacy, on bookkeeping, on tax issues, on how you can even have succession planning. That's what they don't teach you in Harvard. This is a powerful program, something we can't take for granted, a program that we should make sure that we take the fullest benefits, make sure at the end of the whole program, there may be market access. Let me not speak for the white. There may be market access, and if some people are not taking it very seriously, we can't take the whole 146. So begin to monitor and take stock, because that's why Nigerian Export Promotion Council is a BSO.
Women in Focus again there. Let's take a break. When we come back, we'll go global. Please stay with us. Welcome back. It's time to go global now with Ladi Williams.
Yeah, good morning, Edie. So on the global space, we're still seeing investors. They're just trying to understand this, final full trading week of December. At this point, seeing the way, markets are going. If you look at the oil market, we're seeing the
oil market, we know President Trump is in charge of
exactly.
That.
It's all about outputs.
I think the equities market, AI boom or burst.
Exactly.
That's what's driving it.
Yeah, investors are trying to understand if, the valuations by these companies are real, at this point, and if they can justify all the spending so far for artificial intelligence, are they going to make the money? Imagine spending $5 billion on this technology and you're not making that money back.
That's what I did.
You spent $5 billion on artificial.
Mm-hmm.
That's kind of colleagues I have here. All right, let's get a check on some of the stories now. We see shares of Coinbase Global Inc. That climbed after U.S. That's the largest cryptocurrency exchange unveiled major product expansions. That's coming from the U.S. at this point. It will begin offering stock trading alongside its core crypto assets. The company announced that it will begin offering all these assets. Still, focusing on crypto. They're not leaving crypto, at this point. It will launch thousands of prediction market contracts tied to, real-world investments such as politics, sports, and economic indicators. The move, part of Coinbase's broader strategy to become an everything exchange, is aimed at attracting a wider range of investors and putting the platform in more direct competition with the established brokerages and retail trading apps that we have so far. Also, we see the United States have approved a record $11 billion arms sale to Taiwan, marking the largest weapons package ever authorized for the self-governed island. The move is aimed at, strengthening Taiwan's defense capabilities amid rising military pressure from China, which considers the island part of its territory. Washington says the deal supports regional stability, but is expected to further strain already tense U.S.-China relations. Beijing has strongly opposed previous arms sales and is likely to respond with sharp diplomatic and military reactions. I'll take it on to Switzerland now. Swiss watch exports that fell 7.3% in November, sliding to 2.24 billion Swiss francs compared with a year ago, according to industry data released today. The downturn was driven largely by a sharp contraction in the United States, where demand dropped more than 50%, overshadowing gains in other regions such as UK, Hong Kong, and Singapore. Wristwatches, which form the core of Swiss shipments, were similarly down, underscoring persistent challenges for the luxury timepiece industry amid shifting global demand pattern. I guess people don't really want to buy watches that much at this point, but that's the biggest export there from Switzerland. Well, to other stories now, Moody's, they've raised the credit rating for Siemens Energy AG to Baa1 from Baa2, citing the company's improved performance in fiscal 2025 and a strong outlook for 2026 to 2028 with a stable rating outlook. The upgrade reflects a significant jump in profitability, with the company's adjusted EBITDA margin rising 7.3% from just 0.7% last year, and a solid 138 billion euro order backlog, supporting future growth. Moody's also pointed to improved leverage metrics and a healthy free cash flow as Siemens Energy forecasts double-digit revenue and profit margin growth next year, reinforcing its financial resilience. Let's go to Europe now, other parts of Europe. German defense manufacturer Rheinmetall has launched the sale of its civil business, marking a major shift towards focusing on its core military operations. The company announced that the civil division will be classified as discontinued operations with immediate effect, and it will record a non-cash impairment charge of around 350 million euros tied to those activities. The move is part of a broader strategic refocus, while Rheinmetall also signals confidence in its defense-oriented future. Analysts note the divestiture is expected to streamline the business and sharpen its competitive edge in a market, driven by rising global security demand. Definitely, we know Rheinmetall, that's over 100% this year. That's talking about the stock, and other defense stocks have been doing so well, but they're not doing so well. Right now we're seeing some pullbacks with most of those stocks in Europe. All right, let's look at other countries now. Fitch Ratings, they've affirmed Costa Rica's long-term foreign currency credit rating at BB and upgraded the outlook to positive, a clear sign of growing confidence in the Central American nation's economic fundamentals. The move reflects strong growth, ongoing fiscal improvements, and a strengthened external position, even as high interest costs and political gridlocks now remains a challenge for the country. Analysts say the positive outlook could support stronger investor interests ahead of key elections next year, underscoring Costa Rica's resilience in the face of global economic uncertainty. Talking about assets that are struggling this week, see Bitcoin price hit a lull right now, trading around $86,500 and slightly lower today as the world's largest cryptocurrency. Stayed muted ahead of key U.S. consumer price index data that could influence the Federal Reserve's next policy moves. Markets are showing caution with lingering ETF outflows and a failure to reclaim the $90,000 level, highlighting consolidation rather than a fresh upswing. Investors are closely watching incoming inflation figures for clues on interest rate direction, keeping crypto traders on edge.
All right, Ladi, thank you so much for that. Ladi will be back at 1:30 during Business Incorporated to give you updates from the world of business. And just before the program comes to an end, let's see what's happening in the Nigeria's equities market. We can tell you that it's in the red this morning, slightly so, but we have some strong drivers of that negative trade at this time. For instance, MTN already is down almost 6%, 5.77%. There's also Aradel. Aradel is down at this time, 0.43%. These are live trading numbers at this time. And First Holdco is also down now at 0.51%. And then remember, Axel Savings has the news around it where CBN has revoked its license. Well, that's unchanged. But we have Dangote Cement also down 0.59% in early trade. Guarantee Trust Holding down 0.34% at this time. But we have some positive. It's not all red. Like Access Co. Access Co is up 0.72% in early trade. Zenith Bank is also up 0.47%. So we'll see what happens at intraday when Ladi is here to give us updates on those numbers. Perhaps the sentiment would have changed. Perhaps we'll have more green than the red. But for now, the market is trading in the negative territory. Still profit taking happening right there. I'm Ini John Mekwa. Thank you so much for being a part of Business Morning today. We'll have a very special episode tomorrow at 10 a.m. We're going to be looking at the budget. So we see President Bola Tinubu trying to eliminate the multiple budgetary system, which unfortunately seems to be what we have been running with for some years now. And we heard him repeal or ask for the repeal of the 2024-2025 budget. So we'll dissect all of that and the performance of the 2025 budget. How much has that affected you? What are the hits and the misses? We'll discuss that tomorrow at 10 a.m. We don't want to miss it. It's going to be a house full of great economists, great minds. We'll do that tomorrow. I'm Ini John Mekwa. See you then.